Good morning and welcome to Join the Dots. And we're going to join a few today. Now, the last 2 days I've spent describing my preparations for what is coming, which I spent the first month telling you why it is coming, because it is coming. Everything is unavoidable now. The consequences are unavoidable. We have an unavoidable future, so let's prepare for it. Right, my preparations so far, as I've explained to you, year to date, 37.5% up, 61.9% up, 47% up. So I'm happy. All right, so let's go back to the future. The future is dependent on the macro. So let's look at the macro again, all right, because the macro picture is scary and getting worse every day. And I want to concentrate on China, and you might be bored by China, but don't be. Because just like subprime in America, it caused everything that happened in the GFC. Well, China is going to cause an awful lot of what happens in the next year, 2, 3 years. Okay? And just to show you that I'm not the only one doing this. BlackRock have just, not BlackRock, Bridgewater have just sold all their shares in Chinese companies. They've done very well because they held out for these last 3-4 months where the index has been moving up despite the economy completely imploding. Property, 30% of the economy, crashed. Consumption, 38% of the economy, crashing. Exports, no one wants their EVs, do they? Because they want their own EVs, because they need their own EVs. The economies are falling. They need to preserve their own industry. So they don't want Chinese cars, they don't want Chinese solar panels, they don't want Chinese anything. They need to protect their own industries and economies. So the third leg of the Chinese stool, gone. Exports, not yet, but it will. They're claiming they're up the last few months. Yeah, okay. Right, I'm going to give you a link below on this to something that I see. Oh, this was Bridgewater. Sorry, I'll come on to that. HSBC. Now here is a beautiful piece, really detailed. Have you got the patience to watch it? In most cases, I doubt it, which is a shame, because you need to work at it. Told you before, you work 2,000 hours a year on your job. Why not work 10 hours a month on your savings, which are far more important than what you earn? You earn, you get it. Your savings, you lose it, you lose it. So why not invest some time, work at it. Watch this link to Eurodollar University. Then you can start to join the dots. You can start to recognise the dots that you need to join. Okay? So we see here that HSBC, which is sort of try to sort of bridge China and the West. It's in that position of where am I really based? London or Hong Kong? Where? And it went towards China. Okay, after the GFC, it leant heavily towards China. It got it wrong. Okay, so let's have a look. The Eurodollar sees China's crisis as far worse than anyone imagined. No. If you listen to my first 5 or 10 episodes of Join the Dots, you know that I didn't have to imagine anything. It's in your face. It's collapsing. Why do you have to imagine anything? So, Hong Kong, China, 73% of commercial loans in the HSBC book are considered risky. 73%, that's almost 3/4 are risky. It's like the American commercial real estate market. They're all risky. Again, join the dots, please, join the dots. So HSBC is now claiming to do a global restructuring, which of course they do under a fanfare and it all sounds great, but what does it mean? It means they're in crisis. Global restructurings don't happen when everything's going great. They don't happen. They happen in total crisis. So there's layoffs, there's all sorts of problems at HSBC. And we know that in China now, all the banks are buying bonds, government bonds. Why? Because it's safe. And I would say because the Chinese government is telling them to buy the bonds because they need them to buy the bonds. Okay? So they're buying the bonds. So what does that do to the economy? Makes it illiquid. Ah, there's the word. illiquidity, here it comes. It's spreading. Okay, illiquidity throughout Hong Kong, throughout the Chinese market. They're not lending to companies, they're buying the government bonds at what rate? 1.7% for a 30-year bond. How attractive is that? No, it's safe. No, it's not. But we'll find that in 10 years' time. I don't think it is safe. That's how serious I see the crash that's coming. Illiquidity. Governments, what they call crowding out the economy by selling bonds into it that the banks say, well, we'll buy the government bond. At least, you know, if they fail, we fail. It doesn't matter. So, and we move on now to more macro in China, because you need to understand what is also happening, not just in the financial world, but in the actual people world. And for that, we go to Lai's Real Talk. Now, I will link in the Eurodollar University, so please, please, please watch it. It's only 10 minutes. Watch it. Join the dots, or at least recognise the dots, and then I'll join them for you. So the Eurodollar University there, Jeff Schneider, brilliant job. It's there for you to understand the problems. And the problems in society are more described in Lai's Real Talk. Again, I'll put the link in, Lai's Real Talk. Again, it's 10 minutes, for goodness sake. In the scheme of what you earn in a year, invest 10 minutes or invest 20 minutes. Lai's Real Talk I've defined as the 4 modern horsemen of the apocalypse. Because China is going through drought, floods, pestilence. Yes, there's a new virus coming just in time to liquefy the economies. Yes. And the 4th one, illiquidity. Okay, so these are the 4 modern horsemen of the modern apocalypse. Drought, floods, pestilence, really debt, which then leads to illiquidity. All right, so I'm going to link in Lai's Real Talk. Watch it. There's a massive power struggle going on. So the geopolitics are in there. The politics are in there. Now they're taxing all the people. They're taxing the people at the very bottom of the chain. And owners are giving up businesses because they can't pay the tax on the people. And the people can't pay the tax, so they're resigning. And who's coming in? Pensioners who don't pay this tax. So now you're going to have all the youngsters pushed out of employment and the pensioners brought in. It's madness, but it's happening. And it's structural. And it's unavoidable. And the consequences are unavoidable. That's why we need to join all these dots. These are the dots I'm giving you. These are massive dots. Now, as we see this all happening, can you please kindly like these videos, subscribe, and more importantly than anything, share them, okay? Please share them. There's a lot of people who need to see this. Doesn't mean they'll react the way I say the way I've reacted. That's fine, that's up to them, but they're not getting this information from the mainstream media. They're not getting it through Bloomberg, they're not getting it through CNBC, they're not getting it through the Wall Street Journal. They're not getting it. So they're fooled. And we come back to private equity soon, and I've got more stories on how they're fooling everyone, okay, for your 401k. So be careful. So, okay, I think it's enough for now, and I'll be back tomorrow.